Hey, what's up? This is Brian Kuzmar from Commercial Rare Coins and Precious Metals in Lauderdale by the Sea. Kind of rough day out there, and this is kind of a perfect example of how our entire year has been a little bit rough. However, for us precious metal people, gold and silver owners, it's not been as rough as most people's year has been so far, because since the beginning of the year, we're almost up double on the price of silver, and the price of gold is up from $1,200 to almost this $2,000 level. So rough seas, rough year for most of the world, but for us gold and silver people, it's kind of like these surfers right out here. When you are given lemons, you make lemonade, and when surfers are given rough seas, everyone else goes home and they think, well, it's going to be a crappy beach day, no suntan, no lounging and swimming about in the ocean today. However, if you plan properly and you can make lemonade out of lemons, then it's not so bad. And that's exactly what us precious metal people have been doing for quite some time now, at least this year, it looks like. Let's move along to headlines here. Love to include the Zero Hedge because they just print and do articles and opinions that you're just not going to read in any corporate media anywhere. And I got to respect that. I like to see all different types of opinions, not just the mainstream corporate opinion. You don't learn much from that. It's nice to see different opinions, even if they're a little bit out there and a little bit crazy. It just kind of expands your mind and expands your ability to make better decisions, in my opinion. Now, I'm not saying believe everything you read. However, read everything that you can possibly read when it comes to different opinions, even opinions that are completely different than your own. Again, I'm just kind of talking about Zero Hedge because it is not one of the typical mainstream publications. Love the headlines. Tyler Durden writes, Big Tech banks Bitcoin and bullion jumps as dollar and bonds dump. And the key headline for us precious metals people, us precious metals people, is bullion jumps. Well, that's what we are here to talk about, is gold, silver, and platinum. We're here to talk about bullion. And why did bullion jump? Because dollars dumped. And what have we been talking about for the last few months? We've been talking about dollar weakness and how that plays into the price of gold. One of the primary drivers of gold prices is this endless printing of money, just nonstop printing of money. And that's been happening since 2008 when the Fed's just been bailing out everybody. And you'll see I'll give you a graphic at the end of this report here to kind of so you'll get a visual idea of what's really happening out there. Meanwhile, let's go right to spot prices instead of holding that off to the end of the show here and see what's happening. New York spot prices closed at 1910, 24.93, almost $25 for silver. A steady climb this week, hasn't been acting as erratically as it was before. Platinum sitting around 872, slowly following gold. Again, I feel that gold is a big brother. Gold is really the leader of all these metals. Gold is the gold standard of all these metals. So I think that, you know, as much as people really are keen on silver, and I love silver, and I think silver is still a great investment, I think you're going to make far better money percentage-wise on silver. Gold is leading this whole thing. And why is gold leading this? Well, because what we just talked about, dollar weakness, endless money printing, and fiat currency, something we've been talking about for a while. So anyway, I'm not going to beat that dead horse. If you've been following my show, you know all about this stuff. And let's take a look at what I think is going to happen tomorrow and what I said yesterday. I said yesterday that I thought we were going to see about the same gold prices and silver prices, mostly gold prices. Silver will follow erratically and platinum will, but I'm going to focus more on gold now when I do these reports. Not that I'm not going to focus on silver, but silver's a little more erratic, and gold is the leader. I don't think we're ever going to see gold stay down and silver just keep going up and up and up and up and up. It's just not going to happen unless it has something to do with the gold and silver ratio. And platinum is just lazily following everything. So I'm going to talk a little bit about gold more than silver when I do these reports. And let's take a look at what the world spot prices closed at. Just a tad less than New York, and about the same on silver and about the same on platinum. However, I did this report late enough that we can look at the aftermarkets here and see what's going on. And about par value, 1910 24.77. Again, silver a little more erratic than gold, a little harder to predict on a day-to-day basis, and the moves are, again, bigger, whether it's to the downside or upside on silver. Love the metal. Think you'll make a lot of great money, but I think if anyone tried to day trade silver, especially the way it's been acting, they're just going to get hammered. That's it. There's no rhyme or reason that I can figure out to its erratic movements during the day. Unlike gold, which seems to be more of a knows where it's going, knows why it's going, and I can kind of tell what it's doing and why. Again, based on a lot of dollar strength lately, mostly. Let's take a look at what the aftermarkets are doing. It'll tell me and give me an idea. Unless we see dollar strength tomorrow, I think the aftermarkets are going to tell us that we're going to see about the same price of gold or slightly higher tomorrow. The same thing with silver and platinum. I believe that we'll see about same prices or higher tomorrow. Again, unless we see some anomaly in dollar strength, expect, again, my prediction tomorrow. Again, it's a prediction. Don't trade on what I'm telling you, folks. Make your own assessments based on what I'm trying to teach you. However, my prediction is tomorrow that it will be about the same and slightly, maybe slightly up tomorrow, based on the headlines and everything that I'm looking at as well. Let's move along to the calculator. Why am I going to the calculator? Because I always talk about the gold and silver ratio, and some people aren't really familiar with how you derive a gold and silver. It's fairly simple, but I don't want to diss anyone for not knowing it, because everybody has their expertise in certain things, and in case you don't know it, it's really just simple math. All you have to do is take, let's just use New York right today, New York silver and gold, and do the silver and gold New York ratio here. So I'm going to say 24, 94, 19, 10. So let's go to the calculator here and do the math. 19, 10, and I'm going to divide that by, excuse moi, 24.94. I forgot what I just said. Divided by 24.94, and this is going to give us our gold to silver ratio. 76, so let's just say 76 to 1. So the current gold to silver ratio, based on dividing the silver into the gold price, as you can see right here, the calculator, right over here. Oh, well, it doesn't show you. Oh, there it is. 1910 divided by 24.94 gives us a 76:1 to ratio. And we haven't talked ratios for a little bit, so I'm going to go into this real quickly and show you this. Oh, hold on one second. That's gold price. No, I'm going to move along there. Where's my ratio sheet? Right there. Gold to silver ratio since 1999. I've just found this graph. I kind of like it, and kudos to at stockcharts.com for coming up with this graph right here. And let's take a little closer look. I was trying to figure the 20-year average, and I got it wrong like a month ago. I was telling you I thought it was like 70 to 1 or something like that. According to this chart, the 20-year average puts the gold and silver ratio to 60 to 1. So I found that really interesting, and I was wrong on that. And I think that this is where, kind of in this range, give or take a little bit, is where the average should be normally. And right now we are at 76 to 1, if you notice, so we're right up in this range. I think we went as high as 100. If you remember, we went up to 112, 120 to 1 range in the springtime. And let's take a look at all these different ratios here over the course of time. 1999, you can see that up to 82 to 1. And this kind of makes up for 2008. Look at this gold and silver ratio right here. What happened in 2008? The great financial crisis. And we certainly got a really low in the gold and silver ratio is here. However, what does that really mean? Because in 2006, or actually, yeah, 2006, we had a 43 to 1. So this whole period right here, what was this telling us? I don't really know, I'll be honest with you. If I had a little time to assess that, there's a message that this gold to silver ratio is telling us right before the crash here. And then look what happened shortly after the financial crash. It just flew up to 84 to 1. And then after that, again, look, 32 to 1 in 2011. That is right when silver was around $50 an ounce and gold had hit that $1,900 level where it's at correctly right now. So look at this. 2012, right before precious metals crashed in 2012. And I don't want to say crashed, they were monkey hammered. One day I'll do a show about that, but the prices were monkey hammered on precious metals, and I'm telling you, it was a takedown. It wasn't anything natural that happened in 2012 that took gold from 1900 to 1100 and silver from 50 back down to the $12 level. Anyway, this is right in that period, right before the crash in precious metals. Silver was 50 bucks an ounce, gold was close to 2,000. And then we get creeping back up here, back to our normal average. And like I said, we went up to the 115. There's a lot to be read into this, especially if you look at the timelines here. I'm going to move along because I don't want to make that too long and move into this chart that I really, really, really liked. And this chart talks about it's inflation adjusted dollars. It's a 100-year gold price chart, and I thought it was pretty damn cool. So it again, the dollars rate, the dollars kind of adjusted to reflect inflation here. Supposedly, I'm not quite sure how they did it, how accurate it is, but let's take a look at some historic things here. 1915. This is shortly after the Federal Reserve was created in 1913. Let's look what happens to the price of gold. Again, adjusted for inflation. Let's assume that the dollar's never changed for inflation, that it's always been worth the same. The dollar's never gone down in value. So let's take a look at this chart here. We're going to go through World War I, where it continues to decline, the price of precious metals, and then we're going to go up into the Roaring 20s, where it increases. Then we're going to go into the Depression era. Look what happens to the price of gold in the Depression era. It goes up dramatically for this timeline right here, shortly after the Federal Reserve. Federal Reserve was created here. The great crash of 29 was right here. The Depression's right through here. And what do we got here? World War II. And then you've got the other wars going through here. And look what happens right through here. Well, the wars, they weren't cheap. Gold was actually really wasn't that expensive at all. But look what happens here shortly around when Nixon gets in office, and especially when Nixon takes us off the gold standard. Gold explodes. So look what happened to the price of gold from almost the time of when the Federal Reserve was created and basically took over the dollar. We weren't really backed by gold, but we kind of were. And when Nixon officially took us off the dollar, look what happened to the price of gold in inflated, adjusted dollars. That's pretty incredible. And again, there's a lot to read into that as well. That's really about it on the graphs and stuff. I think you should study that more. I think overall, those graphs show me that we are in a great place as far as investing money in gold and silver. That's strictly my opinion. Again, not trying to give you any advice how to invest your monies or where to put, not invest your monies, how to secure your wealth. I'm not trying to give you any advice on how to secure your wealth per se. I'm trying to teach you how to do it. Real quick look at the Wall Street Journal, see if there's any black swans in here that talk about money printing or anything else or anything that is concerned to us precious metals people. Not really. Goldman to pay a $2.8 billion, admits to wrongdoing to settle charges. I tell you what, Goldman just agreed to pay, I think, was it Goldman? Yeah, they agreed to pay like $1 billion for manipulating the price of gold and silver. You know why they did it? Because they made $2 billion. So if Goldman is paying a $2 billion fine to the government, and they love $2.8 billion. What's the government not to love about that? We just got $2.8 billion from a company fining them. But Goldman paid $2.8 billion to them. It usually means that they made double that. So Goldman probably made $5 billion on that deal. So what? They had to give $2.8 billion back because they did something illegally. No one's ever going to charge them criminally. Boy, I just went off on Goldman. I'm sorry to say that, but some people are above the law, and Goldman Sachs are one of them. That's for sure. Google exclusive. Really nothing here to talk about on precious metals. I wanted to talk about this, but before I go on here, cheapest product out there still is Krugerrands and generic silver, and I probably should have told you at the end of the show, but here's what I was promising to show you. I want you to look at this for a second. I'm going to show you this website. You can click it. It's very easy to find. It's been here for a long time. Look at that. U.S. national debt. Debt per citizen, $82,000. $82,000. Each of us owe $82,000 in debt that we never even, it wasn't even our fault. Why do I owe 82,000? Anyways, I find that sadly comical. And I didn't make fun of it, but this is just sad, folks. Look at this. This is a live clock too. It's been around for a long time. Debt per taxpayer. Why do I owe $217,000? My gosh. Anyways, take a look at this chart. Very impressive. My gosh. This is called usdebtclock.org. Oh, it's right there, usdebtclock.org. You can put this on your computer anytime if you want to be depressed. So, if you want to just stare at something and be depressed for a little while. It talks about all kinds of cool stuff here. You can break these things down to unfunded debt and interest, U.S. total interest paid. Let's take a look here. U.S. debt held by foreign countries, $7 trillion. I mean, folks, man, this is not good. When you start to look at all this stuff, it makes you happy that you own gold, silver, and platinum. Anyways, this is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. As I said, I was telling you the best products right now, and I'll try to always tell you each show what the best, cheapest products out there to buy nationwide, in my opinion, unless you can find something cheaper. I think nationwide right now, Krugerrands are still the best deal out there, lowest premium out of all the gold coins, unless you can find bars at a good deal, 1 ounce gold bars, or some other esoteric products. And as far as silver goes, absolutely the best deal you can buy out there is 90% silver, otherwise known as constitutional silver. Cheapest price all over the country. So if you want to buy silver, look for constitutional silver. The next price point up there from there, I kind of think, again, I'm talking about popular products, not everything. There are products that are a lot cheaper, but I'm talking about popular products. The next popular product up from 90% constitutional silver would be generic 1 ounce pure silvers. That's my recommendation. If you don't live in my neighborhood and you can't come by to buy directly from us, ask your dealer for those. Those are probably the cheapest products out there. When you do ask them for them, though, just say, hey, listen, is there any popular products that you got here that are cheaper than those? And if you got a good guy, he'll tell you. Meanwhile, if you live in my neighborhood, that's a given. We're going to tell you that anyway. Call me anytime at 954-493-8811 between 10 and 4, Mondays through Fridays. Give you live quotes and happy to educate you. And please make sure you, I'd love to have you hit subscribe on my videos. You'll get an update when I have a new video, and hit the bell up there too. It'll give you a personal update on your YouTube. And I really appreciate you watching. Have a great evening. Talk to you tomorrow, and let's see what happens.